There is a silence before this storm, and I feel it right now, deep in my chest, every single time I open this chart. Arthur Hayes' BitMEX, over a decade of history, closing its doors like a candle finally burning out in the wind. The Crypto Clarity Act still trapped in the slow, grinding machinery of Congress. Whispers of rate hikes creeping in later this year like a cold front rolling over the horizon. And yet, underneath all of that darkness, I feel something else stirring. Something that feels almost like hope trying to break through frozen ground. So today, I am Marco from Crypto 101 Central, and I want to sit with you in this moment, in this crypto winter, and ask together, how much longer until the thaw comes? Until the ice cracks and prices find their footing again? Before we go further, if you feel even a flicker of that same restless hope inside you, do me a favor and subscribe to this channel, because we are walking through this winter together, week by week, chart by chart. And please, click that little bell because I don't want you to miss the moment when the season finally turns, when the first green shoot pushes up through the snow. Okay, let's breathe and let's look at the truth the charts are trying to whisper to us. We start with Bitcoin against the dollar on the weekly time frame because sometimes you have to step back from the noise, the way you step back from a painting to actually see what it is. Up close, all you see are brushstrokes, chaos, and confusion. But from a distance, a shape emerges. And what shape do we see here? It looks almost like grief itself, honestly. Sharp drops that knock the wind out of you, followed by fierce, defiant rallies, and then another leg down, like waves crashing again and again on a shore that refuses to give up. This is what a crypto winter looks like. This is what surviving looks like. We had that first brutal drop, and then a rebound so strong it felt like a resurrection. Then another leg down, this one gentler, almost hesitant, and the rebound that followed it was weaker too, softer, like an echo losing its strength the further it travels. I had once marked where this bounce could climb to, a certain resistance level, but here we are already deep into the back half of July, and I have to be honest with you, I am not sure we get there this time. It feels like the harder the fall, the more violent the spring back up, like a wounded heart that loves harder after heartbreak. But this fall was not as harsh, so the rebound has not roared back with the same fire. And that line I keep watching, that resistance sitting above us right now, do you know what it actually is? It is the ghost of the old all-time high from previous years. A monumental scar on the chart, a place where price touched again and again, broke above it once in triumph, only to be dragged back down beneath it, unable to hold on, like grasping at something just out of reach. And now that same line stands above us again, this time as resistance. A wall built from old memories. Now let me zoom out even further to the monthly chart, because I want to show you the emotional rhythm of these crypto winters across past cycles and now this one. Every single time, without fail, July has carried a certain strength in it, a certain stubborn will to rally, sometimes bouncing around double-digit percentages in previous cycles. Are we seeing smaller and smaller echoes now, diminishing returns on our hope? Perhaps. We have had our bounce this July, and we have a short time left before the calendar turns into August and September. And when I look at the median and average historical performance across all these years, a story starts to form, almost like a heartbeat monitor. The early months of the year are generally strong, generally hopeful, especially going into mid-spring. Then summer arrives and something tightens. The market seems to hold its breath. July, right now, this month we are living inside of, has actually been outperforming historical averages. But then, and this is the part that makes my stomach drop a little, August and September have historically been unkind, often sliding into negative territory or barely scraping past flat. We are standing right at the edge of that window, right now, this week, where maybe even the first days of August still hold a little magic before the color drains from the chart. If this video is stirring something in you, if you feel that strange mixture of anxiety and anticipation that I feel every time I study these patterns, please hit that like button. It genuinely helps Crypto 101 Central keep breathing and reaching more people who need to hear this. Now let me go even deeper into the 4-year cycle model, because this is where things start to feel less like technical analysis and more like general macro rhythm. Looking across previous cycles alongside our current timeline, it offers a helpful baseline map through the fog. Markets rarely repeat perfectly. Timing and magnitude shift constantly, but the underlying psychological rhythm of bottoming and topping often returns like a season that eventually turns. If you take an average across previous cycle peaks, it provides an interesting reference line. And if we project that structural context forward, it might quietly point toward a broader zone, where a potential cycle floor could eventually materialize. Zooming into the window of time directly ahead of us, we are entering a phase where volatility and unpredictability remain high. Sharp temporary rallies, sudden pullbacks, or long stretches of sideways consolidation are all well within the realm of possibility. Historical bottoming windows across past market cycles suggest that major structural lows often take weeks or months to fully establish, rather than happening in a single moment. With every week that passes, we drift closer to that historical time frame where multi-month bottoms have typically formed in prior cycles, roughly spanning the autumn window late in the year. As for the exact path price takes to get there, market conditions remain fluid. We could see another leg down, a prolonged grind lower, or brief relief bounces along the way. Lower historical support zones near key realized value metrics serve as helpful technical reference points, though broader market capitulation could push levels down toward psychological round numbers or lower depending on global liquidity. These levels represent rough historical benchmarks and structural guidelines rather than precise predictions, so they should always be viewed with healthy caution. Would love to know how you are navigating this market, so scroll down and leave a comment with your own thoughts on where the cycle might find its footing, because sharing this perspective makes the journey through crypto winter far easier for all of us. Stay close, stay patient, and stay awake to what the charts are showing us. Make sure that bell stays turned on so you don't miss our next deep dive when the macro landscape starts to shift. Thank you for watching Crypto 101 Central.